Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the euro currency again. The situation on the euro currency right now becomes even more tricky than it was last week, and particular on the daily chart, I do not like the recent drop that we've got on Friday. So actually this rally that we've got here, it was surprising, yes, but from the perspective of the hand shoulders pattern, well, it corresponds to the idea of the hand shoulders, because that's the bottom of the right arm, although it was really impossible to predict that Jerome Powell would tell something about the Fed rate. But nevertheless, this rally has happened, and the chart doesn't care from which driving factor this action has happened. So actually, until this moment, everything was nice from the perspective of the hand shoulders. But take a look what has happened recently. On Friday, we have this huge sell-off. From the market mechanics of the pattern, that is irrational behavior, because what is really is going on the hand shoulders here is the actually this part of the pattern usually controlled by the bears. So this, when the left arm starts to form, nobody understands yet that this is the starting of the reversal, and everybody thinks that this is just the pullback. And indeed, the new sellers step in and trying to push market lower. Indeed, that has happened, but suddenly market stands, stopped, and turns in the opposite direction. That becomes the break-even point where bulls starting taking the control. That is already another attempt of the sellers to push market lower, and this is actually the capitulation of the bears, as has happened on the bottom of the right arm. And that the moment where the bulls taking the control of the market and starts push market higher. And from that standpoint, as you understand currently, this sell-off is not really a good sign, because it stands irrational to the overall market mechanics of the pattern. And that's the moment that's worrying me. Besides, do not forget that we have on the weekly chart, actually this top is the bearish grabber on the weekly. And this pattern suggests the taking out of these lows, which means that we could get here, for example, the butterfly or at least the ABCD pattern down. Analysis of the Commitment of Traders report also shows that some longs positions have been closed recently. So we would not see the big increasing of the bearish positions, but longs have been closed, and it means that market investors do not expect some big appreciation on the euro currency in the nearest time, although at the same time they also do not expect the deep significant downside continuation. But mostly the overall setup, overall context looks moderately bearish. That is what really creates the overall situation tricky on the daily chart. At the same time, guys, the final technical confirmation has not happened yet. And despite that we have this here the strong sell-off, the invalidation point for this bullish construction stands with these lows. And only if market will break them, it will tell us that we are coming and turning to the real bearish action, and we should watch for downward continuation. Until this moment will happen, theoretical chance on the bullish scenario exists. So it means that currently you could choose what you like more, what stands closer to your personality. So if you're more conservative trader, you could just deal with the daily chart and see for a final confirmation. So if market will drop below 113 lows again, that will tell you that we're standing in a downward action, and after that you could try and take the short position. Or you could wait the sharp reversal here, fast acceleration. Maybe if this will happen, then we could proceed with our hand shoulders. For more active traders, if you trade on intraday charts, you could take a look for some other setups. For example, if you'll take a look at the 4-hour time frame chart, this setup's of course more risky, but at the same time, dealing with these setups lets you to take the position right in the beginning of some action. For example, since the bullish scenario still stands on the table, it has not been erased totally. That is what really could happen on the market if somehow we do not know what real driving factor could appear But if somehow, by some factor, market indeed will start upward action here, we could turn to this scenario. So take a look at our ABCD pattern of the hand shoulders. So OP around 1523. And second part of the pattern could take the shape of the butterfly. This has the 1.7 extension, the same 1530 area. That's particular what could happen. That's why this point, particular, will be the key to everything. So take a look at the 30-minute chart. What we have. That's our wedge pattern, by the way, that we have talked about on Friday. So market has dropped to the 618 support 1370. And take a look here, we have the perfect thrust down. So keep an eye on the patterns, guys. For example, if market will form here the double repo buy, that will be simultaneously set up for two trades. First of all, if you have the bullish view, this will give you a chance to take the long position with a very tight stop, because you could place stop slightly below the lows of the double repo, for example. And if market will start to work, you could appear right at the point of the starting huge upward action. So you will take a position right at the lows of the butterfly wing right here, where the target is 1530. So it's great potential and great risk-reward ratio. At the same time, if market will form double repo pattern, but it will fail and market starts dropping, that will be clear indicator that hardly any bullish reversal, bullish continuation will happen, because double repo failure is also bearish directional pattern. It not just cancel the bullish setup, it also is a bearish setup. And it means that market will drop lower, definitely it will drop back to these lows. And appearing of the double repo fail will be the big challenge in favor of general downside continuation. That's why I suppose that what we'll see on Monday, right around this level, will be the key to the price action that will follow and will last through the coming week.